Hi, everybody. I hope you're having a fantastic morning in personal finance. I know for sure I am. My name is Gage Aguilar. My group is Gage, obviously, Evelyn, and Delano. And we don't really have a cool name. I could be like, hey, it's Friday Breathing Rubber Duckies, but we don't. Anyways, back to what I was actually supposed to here to talk about. Today, I am doing NVIDIA stock. I'm covering that, and Evelyn is covering Google stock, and Delano is covering BlackRock and Russell 2000 index funds. So I hope you all enjoy, and let's get to NVIDIA. What if I told you that if you invested $1 5 years ago in NVIDIA, it would 12x in today's time? I know, shocker, crazy. I wish I would have done it, but shocker, I was 11, didn't know a thing about NVIDIA or stocks, as a matter of fact. But it's okay, because in this video we're breaking down the last 5 years in the NVIDIA Corporation, NVDA, including its starting price, ending price, revenue growth, and the key reasons behind its explosive rise and its major dips. But first, we need our thinking cap. That guy's thinking cap. Oh, where did that come from? Alright, yeah. Alright, now that we got our thinking caps on, we're ready to go. Let's start off with stock price. In early 2021, NVIDIA was trading at roughly $13 per share, adjusting for stock splits. Now let's fast forward to early 2026, and the stock is hovering around $888 per share. Now that's an increase of roughly 1,200% in just 5 years. But it wasn't just a straight shot up. In 2021, shares surged thanks to strong gaming and data center demand, and in 2022, the stock dropped sharply due to broader tech sell-off. But in 2023 and 2024, everything changed, and the reason? AI. So, you might be wondering what caused a generational run like LeBron James on the Cleveland Cavaliers in 2016. Well, let me tell you, it's every high schooler's best friend, artificial intelligence. And when generative AI tools like ChatGPT came into the game, companies rushed to buy the powerful GPUs that were needed to train these AI models. NVIDIA's chips became the standard for these AI infrastructure. And then second, data center expansion. Cloud giants like Amazon and Microsoft and Google dramatically increased spending on AI servers, and most of them were powered by NVIDIA hardware. And third, product leadership. Architecture like Ampere, Hopper, and Blackwell kept NVIDIA ahead of competitors, strengthening its pricing power and margins. But just like every other company, it had its downturns. In 2022, rising interest rates crushed high-growth tech stocks. There were also concerns about valuation. Some investors believed that the stock ran too far and it was too fast, and they quick sold. Well, boy, do I feel bad for them. On top of that, U.S. export restrictions to China created uncertainty around future sales. Still, each dip was followed by stronger earnings or even higher demand. So in conclusion, over 5 years, NVIDIA has transformed from a strong gaming GPU company into the backbone of the AI revolution. Its stock price is nearly up 1,200%, revenue up 8 times, and its role in AI stronger than ever. Now, the big question is, should I invest in NVIDIA? I believe it's a great investment, and I believe it's a great time to buy now because tariffs are getting enforced as of literally 8 hours ago, and it's going to be going from 10% to 15%. Now, it's going to bring the stock market down, but to an investor, that's not a loss. That's actually a time to buy. And I believe for the drive for AI and its powerful components and chips needed to process the AI is only going to be needed more, and NVIDIA is only going to grow as a company. So I believe it's a great investment, and I'm going to pass y'all over to Delano. I hope y'all enjoyed my segment.
Hi, I'm Delano, and I'll be going over the Vanguard S&P 500 ETF. It had a starting price of $358.59 on February 19th, 2021. And by February 19th, 2026, it had increased to $634.02. If I invested $5,000 at the time, I would have purchased about 13.94 shares. By the end date, though, those shares would be worth approximately $8,838. That results in a profit of $3,838, which is an 80.81% total return over the 4 years. On April 2nd, 2025, the fund experienced a sharp correction following President Trump's announcement of global tariffs. The ETF fell significantly along with the broader market. However, a long-term investor would not have needed to take action because the fund still delivered strong overall gains. Vanguard is highly diversified, tracking 500 of the largest companies in the United States. It also pays dividends, though at a relatively modest yield. The CEO of Vanguard is Salim Ramji. At this time, there will be no major ethical concerns surrounding his leadership. Though he is relatively new in the role, it will be important to monitor how he guides the company in the coming years. Overall, Vanguard remains a strong long-term investment option due to its diversification, steady growth, and exposure to major U.S. companies. For my second asset class, I chose the iShares Russell 2000 ETF, or IWM, an exchange-traded fund that tracks the Russell 2000 index of approximately 2,000 U.S. small-cap companies. This fund provides broad exposure to smaller companies, offering potential for higher growth than large-cap stocks, but also higher volatility. I invested $5,000 in IWM at the start of the 5-year period from February 19, 2021 to February 19, 2026. Over that time, IWM delivered a total return of about 24% when accounting for price changes and reinvested dividends. That means my initial $5,000 would be worth about $6,200 today, for a profit of around $1,200. While this return is positive, it is lower than many large cap indexes over the same period. IWM experienced several periods of volatility during this time, including market dips driven by rising interest rates and macroeconomic uncertainty, which impacted performance. If I could do anything differently, one option would have been to add to my position during major drops to lower my average cost per share. However, I chose a long-term buy and hold strategy, believing that smaller companies can grow significantly over time. Overall, I selected IWM to diversify my portfolio beyond individual stocks and large cap funds. It adds exposure to a different segment of the market, helping balance risk and potential return across asset classes.
Hello, my name is Evelyn Breedike, and today I am going to be discussing Google and Alphabet Inc. stocks. I was interested in learning more about Google and Alphabet Inc. stocks because I wanted to see the effect that AI had on them. It turns out AI had a huge impact on their stocks, and I will tell you more about it in just a little bit. The start date for these example stocks is February 19th of 2021. One share of stocks cost $105.06 at the start date. If I had invested $5,000 in 2021, that would be about 48 shares of stocks. Technically, 48 shares of stocks would have equaled $5,042.88. Flash forward to now, and the shares of Alphabet stocks are $314.90 each. Those 48 shares from 2021 would now be worth $15,115.20. That is nearly 300% growth over the past 5 years, and the revenue is $10,072.32. Now, was Google stock just going up on a consistent slope? Absolutely not. Google stock actually struggled in 2022 and 2023. In fact, the Google stock actually declined by over 30% in 2 months of 2022. This was due to several reasons, one of which being the anticipation of a recession. Approximately 75% of Alphabet's revenues come from advertising, but the company reduced marketing budgets with the anticipation of a recession. Additionally, investors were worried about the high costs of investing in AI. Luckily, Google stock began to recover in 2023 as fears of a severe recession faded. Google stock also experienced significant growth from 2024 to now. It went from the mid-100s to the low to mid-300s, primarily due to the integration of AI and Gemini, Google Cloud expansion, and advertising revenue. I also did some research on the CEO of Google and Alphabet Inc., Sundar Pichai. Sundar Pichai is married with 2 kids, and he has a net worth of about $1.5 billion. He holds a politically neutral work environment, and there was a protest with some employees at Google against contracts that Google had made with Israel. However, Pichai fired employees involved and warned staff that Google is not a place for political debate. He is also repeatedly denied anti-conservative biases when it comes to search results. Currently, Google stock is worth a lot of money. It even surged over 60% in the past 12 months. However, knowing what we've learned in this class, I wouldn't really anticipate another drastic climb anytime soon, so if I was investing today, I would probably want to stray away from the high price of Google stock. However, anyone who invested the $5,000 back in 2021 is one lucky person because they made a ton of money, and that is a great investment. that everyone probably should have done.